Welcome to Quick Bite, your fast and friendly Florida insurance.
Hello. My name is Roshonda, agency owner of the Isom Insurance Group, right here in the Sunshine State of Florida. Right back for another Quick Bite episode, your fast and friendly insurance update. Today is Tuesday, September the 23rd, 2025, and we're diving into some big news out of the reinsurance world that could eventually trickle down to impact insurers, homeowners, and yes, even auto policyholders. We're talking about the possibility of a 10% property catastrophic reinsurance price drop heading into the January 1st renewals. That may sound technical, but stick with me. I'll explain what it means, why it matters, and how it could affect the cost of coverage in the future. So here's the context, as you can see from the article on the screen. Reinsurance is basically insurance for insurance company. I've explained this before in previous videos, but insurance companies always purchase insurance from other entities. Usually it's like investment companies or investment entities that want to buy the risk from the insurance companies. And that's called the reinsurance market. And what it essentially does is the insurance companies get insurance for like big losses, like a hurricane loss that wipes out, multiple areas at once. So the insurance companies don't go bankrupt and have to go in their reserves to pay the claims. They go through the reinsurance carrier. So when a major hurricane, so just as this is saying, when a major hurricane or wildfire fire strike, your insurance company doesn't absorb all the losses alone. They buy backup protection from reinsurers. Now, according to Aon and Guy Carpenter in this article, two of the biggest reinsurance brokers in the world, the market is flooded with capital right now. In fact, Aon estimates there's a record 735 billion in global reinsurance capital, 14 billion in traditional capital, and 121 billion in alternate capital like catastrophic bonds and sidecars. To put that in perspective, just 3 years ago, after 2023 reset, and reinsurers were tightening their belts and raising prices. And I can attest to that because on some company calls, a lot of the CEOs were saying that they were having a hard time actually finding reinsurance insurance and also the price. So fast forward to today, and reinsurers are sitting on some of the strongest balance sheets they have ever had. Aon's Alphonse Valeria says reinsurers are hungry for growth. Even after a heavy catastrophic year, most reported combined ratios under 95% in the first half of 2025 and returns on equity around 15%. Some big players even hit 20%. That's excellent profitability in the insurance world. So reinsurers are ready to write more business, and that means insurance companies, the buyers, hold the advantage. We're already seeing signs during the mid-year renewals that the property cat aggregate limit placed grew 50% year over year. That's massive. And global demand for property cat reinsurance rose 6% this year, with another 5% expected in 2026, largely driven by US and European markets. So, what's the bottom line? Aon experts Aon expects reinsurers will still achieve their target returns even with 10% plus rate reductions in January 2026. Currently, the industry sits about 20% above the global average rate level for property cat. That's why analysis say reinsurance can cut rates and still hit profitability targets. Imagine You budgeted to make money on your homeowner's policy as long as claims stay under $4,000 per customer. If the average claims this year are only 2,500 to 3,000, you're still ahead, even if you lower premiums slightly. That's basically what reinsurers are experiencing. Now, let's zoom out beyond property cat. Reinsurers aren't just competing on price, they're innovating. One hot topic is AI data centers. These are billion-dollar facilities powering everything from ChatGPT to streaming platforms. Aon called them a multi-trillion-dollar exposure over the next decade. We're also seeing innovation in cyber coverage. Aon recently rolled out a surge stop loss product designed to protect insurers against sudden spikes in claims without requiring a specific event trigger. Think back to CrowdStrike outage that disrupted millions of businesses in 2024. That kind of event could trigger a surge of cyber claims. And this new product is designed to catch exactly that. And it's not just property. Casualty reinsurance, which covers things like liability and auto, is also stable right now for the first time in years. There's no major reinsurer pulling back. Capacity is expected to stay steady or even grow. Rates for excessive liability are still climbing double digits, but the good news is reinsurers remain supportive. That means insurance companies can keep offering coverage without the kind of sharp reentrenchment we saw earlier in the decade. So, what does all of this actually mean for you at home? Let's break it down. If you're a Florida homeowner, don't expect your premium to magically drop overnight just because reinsurance costs are easing. But here's the good news: it can slow down future rate hikes. Instead of a 20% jump at renewal, you may only see a 10%. That's not as exciting as winning the lottery, but our market slowing the bleeding is still a win. For businesses, especially those in fast moving sectors like tech, keep your eyes open. Insurers are already working on new coverage options for things like artificial intelligence and cyber risks. Think about it. 10 years ago, nobody was asking if their policy covered a chatbot gone rogue or a deep fake scam. Now it's becoming real conversation. And for the insurance industry overall, more competition at the reinsurance level brings something we desperately need: stability. When reinsurers are healthy and competing, primary carriers have more breathing room. That stability trickles down to agents like me and ultimately you, the consumer. So, bottom line, it may not feel immediate, but these shifts behind the scenes can mean fewer surprises and a steadier market in the years to come. That's today's Quick Bite episode. If you found this helpful, don't forget to like, share, and subscribe. Also, drop a comment below with topics you'd like for me to cover in the future. Quick reminder, Quick Bite episodes drop every Monday through Friday at 2 p.m. And as always, this video is for informational purposes only. It is not legal, financial, or coverage advice. Every insurance situation is unique, and underwriting, eligibility, and pricing vary by carrier. Always check with a licensed insurance professional before making any coverage changes. Thanks for watching, and I'll see you in the next episode. Always, bye.
Thank you for watching. Visit us at isominsurancegroup.com.